Yannick, I'm fascinated by your business because you have really taken a different tack and almost marketed yourself as, the antithesis of a Robinhood, if you will, in terms of trying to get away from the gamification, trying to get away from all of the sort of day trading that seems to represent at the moment. But in particular, one of the most unique things you did was you decided that you were not going to accept what's called payment for order flow anymore. So the Citadels of the world, the Virtus of the world that typically execute these trades and are paying people, it had been paying you and pay currently to Robinhood to make those trades free. You stopped doing that. My question is, do you think that your investors and customers are getting the same kind of execution in terms of on price that they would have before?
So I think a couple of things, right? So in terms of price execution, what we've seen in these first couple of months, when you look at it holistically, is that it's comparable when you route directly to exchanges versus routing to those market makers. Obviously, there are a number of factors that go into execution quality. But as a retail brokerage, what we pay most attention to is whether people get the price they actually see on the screen. And by routing to exchanges, order execution has become more than twice as fast, which also results in greater price accuracy. And so that's something that we've considered to be quite promising, to be honest.
And so then is it a lie? I mean, I think that's the real question. Is it a lie? Is it a myth that somehow you will get better execution by going through a Virtu or a Citadel? We've now had the leaders of both of those companies on, and they've made the argument about price improvement over and over again.
Yeah, the funny thing is price improvement is a little bit of a relative thing, right? So it's a little bit more nuanced, we think, than just saying price improvement, because ultimately it's relative to the NBBO, the National Best Bid and Offer. That's what the price improvement, I believe, is measured against in those remarks. And there's a lot of liquidity, such as on the ATS, odd lots, other non-protected orders, even fractional share order volume that's available at better prices than the NBBO. So, I think there's a lot more debate to be had around that, because the NBBO also, I think, historically have not taken into account a lot of those odd lot volume and the fractional share volume, which also means it's basically the majority of that retail investor volume.
But not to go too far on the weeds on this issue, do you believe that Ken Griffin's argument doesn't hold water? Is that what you're saying?
What we're seeing is that our execution is comparable. We were routing to market makers in the past. Now we're routing directly to exchanges, and the overall price execution we're seeing so far, 2 months into this, is comparable for sure.
Shepard Smith here. Thanks for watching CNBC on YouTube.